Okay, so what you're saying, people, and welcome back to my channel. So today, guys, it's all about entries. I'll be talking to you about how I enter my trades, where I look to enter my trades, where do I put my stop loss, all that good stuff. I'll be talking to you guys today. A few of you have let me know on Instagram. A few have hit me up asking me to do a video on entries, and also on my stream as well. Some of you guys have let me know. So here it is. I'll be talking to you guys all about entries. Again, I'll be talking to you guys about how I enter my trades. I'll be showing you a breakdown of one of my trades that I've entered recently. Also just taking you back to the basics as well, and 4 things to look for before you enter the trade as well. So a wide range of things to cover and just help you guys, clear things up and simple it down as well. So hope you guys do enjoy the video. All the good stuff, drop a like, subscribe to the channel, hit the bell, all that good stuff will be really much appreciated if you're enjoying the content, of course. But without further ado, guys, let's get straight into it. Okay, right, guys, so first things first, what are the 4 main things that we're looking for before we get into our trade? So if you do have a pen and paper handy, probably want to get that out and take some notes down, because this is things you want to tick off really before you do get into your trade. So number 1 might be the most important. You understand where you want to get into your trades. You can't just get onto the computer and just decide you're going to buy and sell there, or enter the market there. You have to have designated areas in the market where you're looking to enter your trades. For me, I look to use key levels a lot and base my trades around those levels. You can use trend lines, Fibonacci, moving averages, psychological levels, whatever works for you. Different type of technical aspects, I'll go into detail in those in future videos, but for me, I use key levels really to get into the markets. Number 2, you need to understand your trigger. What triggers you into the market. Is it simply just placing an order? Is it looking for candlestick patterns? Is it looking for momentum? For me, I normally use candlesticks and momentum, kind of a mixture of them too. Look for good momentum candles with candlestick patterns, and that's typically how I look to enter the market, and I'll go into more detail in a second. Number 3, you need to understand what sessions you're trading. What session is it? London, Asian, New York. For me, London and New York are the sessions that I trade, especially around the crossover time. So around 1:30 GMT, typically when real momentum comes in the market. So that's what I look to kind of take advantage of. You don't want to be entering out of session, because the market starts to dry up, move very sideways, and it's just not the best time to enter your trades. And number 4, you need to understand where you're wrong. So this kind of links quite nicely with number 1, as in where you should enter. Because if, for me, for example, I use a key level. If price breaks that level, I know that above that level is simply where I want to be getting out the trade. Obviously, you want to be giving yourself room for manipulation, wicks, all that type of stuff. You want to give yourself room, some wiggle room to work with, but essentially understand where in the market is your analysis now invalid. So once you've got those 4 things down, you can look to start placing your trades. Just keep it simple, guys. Once you know these 4 things, enter a trade. You've got the 4 things down, enter a trade. Just keeping it simple and consistent, which is the most important thing. So hopefully you guys got that down. But now we're going to jump into some of the examples and also come to the theories behind entering trades. Okay, guys, so before we look at different examples of how to enter the market, I'm just going to quickly show you the basics, the theory behind it, or whereabouts we look to get into the market. So we all know we have 3 phases in the market. We've got a bullish trend, price making higher highs and higher lows. We've got a range here where price is moving sideways with equal highs and equal lows, or more or less equal highs and equal lows. And then we do have a bearish trend here with lower lows and lower highs. Let me just tidy that up a little bit. But yeah, you can see we have 3 phases in the market, and it's our job to identify which type of phase are we in the market. Are we bullish, are we sideways, or are we bearish? And if we're in the bullish market, we're typically looking for buys here, and the place for that is on these higher low formations. That's where we're looking to buy the market. In a range, we can look to buy and sell, sell at resistance, buy at that support, play in the range of the market. And the bearish trend, we're typically looking at these lower highs here, waiting for price to pull back and looking for continuation. So that's more or less how I look to trade. Again, these are mainly continuation trades. We can also look at reversal trades, which I'll get into a second. But for continuation trades, it's pretty simple. We look to identify the trend, wait for the pullback, and we look for our continuations. And it's our job just to identify where that pullback will happen. Will it happen over here? Will it happen there? Will it happen there? It's our job to identify that. Put our stop loss in a safe place, add confluence in of key levels, trend lines, moving averages, fib, chart patterns, whatever you use to get into the market, or whatever you use to analyze and create your buys. That's why we use our confluence to know where we should be getting in and when we're expecting the trend to continue or reverse. But yeah, that's how we look for our continuations. I'll go into examples in a second. And if we look about how we enter our reversal trades, again, I don't normally enter too many reversal trades. I mainly stick with continuation. But if you're looking for reversal trades, let's say we've got a nice key level or resistance here where potentially we're expecting price to reverse, and we have a bullish market heading into this level. So say we've got a push into there. Now you're looking, at potentially selling the market. It's at the key level. Now you're expecting the market to reverse, so you're looking to put some sells in. So the good and bad thing with this is that if you do look to place a sell here and it works, your trades should have little to no drawdown because you're taking it right at the level. You can put your stop loss just above, of course, and you're catching the right top of the trend of where the next bearish trend could be forming. But the bad thing about this is probability is not really stacked in your favor. So typically the way I look to trade reversals is I wait for the market to give me that sign of reversing, so they shift from a bearish to bullish trend, and I wait for at least that first lower high or potentially the second lower high if it's a little bit messy, but wait for price to show rejection lower than the previous high, and then I'll look to enter that trade and trade that reversal. But I essentially look to trade mainly just continuations, but that's probably the best way to trade reversals in my opinion, or at least wait for a kind of double top at least at that level to show we'll come to respect it twice. Therefore you get more confirmation, more confidence, and just more probability of your trade working than taking just the first kind of push into that level, because if we do that, price could just pull back a little bit, put you into profit, and then just continue being bullish and break through that level. So I'll give you some examples of that as well, but that's the theory behind it, how we look to trade reversals and look to trade continuations. Again, I know it might be a bit confusing now, but I'll show you some examples, so hopefully that'll clear you up, and also a trade that took on pound AUD recently as well. Okay guys, on my screen I've got pound AUD, so I'm going to show you an example of how I got into the market, how I look to execute my trades, and also how I look to pick my direction as well. So this is a pound AUD here, and I took my trade a couple of weeks ago now around this area, so I just used the replay tool. You can see here for pound AUD we had this bullish trend here, which eventually died out and price started to turn bearish and fall to the downside, coming into this level of resistance here. So strong reaction from that level, giving us the bearish trend. So again, people looking for a reversal will be looking to get short here. Again, if you did catch the trade here, it would have been a really nice short opportunity. Of course, like I said, you run the risk of price continuing being bullish, but when you're right, you can really take advantage of that risk to reward and all those pips you can catch, because you're right at the top, so you can really take advantage of that. But I was just looking to get involved on that retrace and just capture the next leg to the downside. So you can see here, clear bearish trend. If I show you the highs and lows of the market, pullback, push, pullback, push, and if I just take that down here, you can still see those clear lower lows and clear lower highs as price pushes on. So when I look to get into the market, I look for price to give me a level where I can work from. Typically the levels I use when the market is bearish are these areas here, or price support, which will be time resistance, and the previous resistance up here of that previous lower high. So I look to play off these levels. Anywhere within here, I look for price to come retest this, and look for my shorts, or retest this level and look for my shorts from there. So again, waiting for those confirmations, and then I just take the trades from there. So that's simply how I base this short on pound AUD. Price had a really nice push to the downside, had a nice support here which it hasn't retested yet. So I was looking for price to come back here, retest that, and simply just look for the continuations back to new lows and take out this previous wick here on the left and see some new lows. So if I do drop to the hourly time frame, which is the time frame I used to enter this trade, wait for price to hit that level, and just there, oh, that's not the button I meant to press, just there we had the test that I was looking for and my entry signal. So like I said guys, the entry signal for me is candlestick patterns. I do have a little bit of a series on my channel now where I talk about different candlestick patterns and the candlestick patterns that I use the most and that work the best for me on my channel. So I'll leave a link to that playlist in the description. Go check that out. Or if you want me to do more content on candlestick patterns and those type of entries, feel free to leave it in the comments down below and I'll make sure I get to it. But yeah, I just looked at the play of candlestick patterns and good momentum. You can see here, strong bearish or bullish engulfing candles are great entry signals here. You can see the markers pushing into our key level, really nice push to the upside, so a lot of bullish momentum there. And as you can see, that was completely mirrored and engulfed by this next bearish candle. So I knew then we had a strong enough reaction from that level. Nice engulfing candlestick. That's where I looked to put my entry. And again, when was that around? That was around 12 coming into 1. So that coming into that crossover between the London and the New York session. So great time to enter your trades as well. And where does my stop loss go? It goes above that area, also with a little bit of wiggle room as well. And like I said, looking to target that previous low down there for potentially some new lows. So if I take this across and press play, we'll see how it plays out. See, price did move for me, came back to retest this area, which is so important to have your stop loss in a safe place. Give yourself some wiggle room because price can often do this, come against you, take out the previous wick and then move. Because again, you won't be the only person going short there. Price might want to grab some more liquidity before it does have that move. And if I press play again, you can see eventually the trade does play out. So again, simply playing the rules of the market here. The market moves in waves, it moves in stages, it pushes, it pulls back and it pushes, and all you need to do is work out where is that that next phase going to come from, and simply just looking to play that support. Again, if price did break through this support here, break through that resistance, I'll be looking at the next level, which is this previous lower high in the market, to see if you can catch a push there and then move to the downside. So just playing those ways. And the entry, guys, it's so simple, just break and retest and looking for those candlestick patterns. But again, does have to have some signs of momentum, because there's some times where you can get a slight engulfing candle but price still goes against you, and that's because there wasn't really no momentum. And normally that happens when you're trading outside of session time as well. So make sure you know where you want to enter. In this case, I was using that key level. Watch your trigger. For me, there's candlestick pattern and momentum. Understand when you want to enter. I was entering during the crossover, so a lot of momentum there. And then obviously, where am I wrong with my stop loss above that key level? Just keeping it simple and looking to play that. Again, this is about 2.4 risk to reward. I know some of you guys might want to look for more, 5, 6 to 1, 7 to 1. All you can just do is just take this and just drop it to the lower time frames. Again, if you do trade the lower time frames, you might be taking a few trades where you could be wrong before you do right, but the risk reward will definitely cover you in the long run. So yeah, it doesn't really matter what time frame you trade off, whether it's an hour, 15 minute, 5 minute. Just look for those candlestick patterns. Make sure you're in the direction of the higher time frame trend, so you can really be taking to momentum. Enter on the session times as well and have your stop loss in safe places. But essentially, guys, that's how I look to enter my trades. So I hope you find this video useful, guys. Again, if you don't understand something, just leave a comment down below and I'll make sure I'll get back to you. Leave a like on the video, guys, if you did enjoy it and found it useful. Subscribe to the channel if you haven't already and hit the bell so you don't miss out on any uploads. But hope you found this video useful, guys, and stay safe, and I'll catch you guys in the next one.